Hello, welcome back to this week's market update. Today is Monday, June 16th, 2025, and we will jump right in. Stocks declined later in the week as escalating geopolitical tensions between Israel and Iran weighed on market sentiment. As of the close on Friday, June 13th, the S&P 500 was down about 0.4% last week, the Nasdaq Composite down about 0.6%, and the Dow Jones Industrial Average down about 1.3% last week. Heading into our economic data from last week, it was largely positive, although some data points like continuing claims have been creeping up. We did get some better than expected inflation prints, though. You can see the May CPI here came out last week as well, with headline inflation coming in at 2.4% and core inflation at 2.7%. So both definitely moving in the right direction after a few months of stagnant and increasing inflation going into the end of last year. On a monthly basis, both headline and core prices rose just 0.1%, demonstrating that inflation remains contained despite the tariff concerns. Within the better than expected May CPI, energy prices were a major contributor, down 3.5% from a year ago, with some categories like energy commodities, gasoline, down as much as 11 or 12% from May of last year. Other categories like shelter, transportation services, and medical care services, those have all been fairly sticky, up around 2.8 to 3.9% from a year ago, while other categories like groceries are up just 2.2%. So definitely seeing some moderating inflation at the grocery store. And last but not least, food away from home. That continues to be a fairly inflationary category, although it is generally pretty discretionary for consumers. That is up 3.8% from a year ago. But overall, a pretty solid CPI print for the month of May. And we'll take a look at the producer price index next. Similar to the CPI, the PPI producer price index, otherwise known as wholesale inflation, came in better than expected. Wholesale inflation clocked in at 2.6%, while core inflation was at 2.7%. So we saw some improvement in the core number, and then the headline number rose ever so slightly there. On a month-over-month basis, the inflation rate was up 0.1% from April to May, so same as the CPI there. And within the categories, we saw energy flat month over month in goods prices, but other categories like transportation and warehousing, which is closely tied to energy prices, that was down 0.2% month over month, so improvement there as well. Overall, we are seeing that inflationary pressures remain fairly mild and tariffs have not led to a meaningful rise in producer costs or consumer costs yet. So we'll continue to watch the data and monitor it for any changes in that trend. Just as we take a look at energy prices falling in the month of May, that may not carry over into June. Oil prices surged as much as 8% last week after escalating geopolitical tensions between Israel and Iran, following Israel's initial attack late Thursday night last week. The sharp rise reflects market fears of broader regional instability, and Iran is a pretty major oil-producing country, so any disruptions in the region could definitely push energy prices higher. Moving along in our week, consumer sentiment rose for the first time in 6 months in the month of June, jumping nearly 16% here in 1 month as expectations for short and long-term business conditions improved sharply. The increase was pretty broad-based across ages, income levels, political affiliations, and regions. We also saw that inflation expectations for the year ahead dropped meaningfully from 6.6% to 5.1%. Now, while this rebound is encouraging, sentiment remains well below the levels we saw earlier on in 2024. And as you can see, we are still in a larger downtrend. Really, since the start of the pandemic, we haven't been able to reach this level of consumer sentiment. So something we definitely want to keep an eye on in the coming months. Lastly here, initial and continuing jobless claims have been gradually rising in recent months, even as the overall unemployment rate remains fairly stable and healthy. For the week ending June 7th, we saw initial claims come in at 248,000, with the 4-week moving average rising to 240,000, which is the highest level of that moving average since August of 2023. Continuing claims, as you can see here over the last year, have also been on a slow rise, up to 1.96 million here in the week of May 31st, and this is the highest level since 2021 of continuing claims. This could reflect a bit of a healthy cooling after a strong post-pandemic labor market boom, but it also could be signaling some cracks in the US economy. So that concludes this week's market update. We really appreciate you tuning in, and we look forward to seeing you next week.